We're in Monte Carlo for the Rendez-Vous de Septembre. For AM Best TV, I'm Richard Banks. And I'm joined now by Bob Reville, CEO of Praedicat. Bob, welcome.
Hi Richard, how are you?
Very well, thank you. It's good to see you back here in Monte Carlo again. Typically in Monte Carlo, a lot of conversations around property cat reinsurance. This year, maybe a little bit more discussion around casualty?
I'm definitely finding that there's a lot of conversation around casualty. I think the last few years there's been a hard market in casualty, and I think a lot of insurers and reinsurers were thinking that they might want to grow in casualty, and then I think now that they're in it, they're not quite sure that the rates necessarily are keeping up with the risk. And so there's a lot of discussion about, if you want to take advantage of this hard market, what are you going to do to manage the emerging risks? And it's a very productive discussion, I think.
What are they going to do to manage those emerging risks?
Well, I'd say, first of all, one area is PFAS and the forever chemicals and the concern that perhaps we actually truly finally have the next asbestos emerging. And, we're not going to know that for several years, but at the same time, there are a lot of things being done to try to manage PFAS exposures, and a lot of creative things, actually. I think there was some concern that it would lead to broad brush exclusions, but instead I'm finding that a lot of our clients, but just as we're seeing in the market, there's a lot of use of data and analytics to try and be as surgical as possible to write the business that you want to write and avoid the business you don't want to write and control your total aggregations. And it's one of the ways in which you're really seeing the new world of data and analytics and modeling being put to good use in an emerging risk.
So inflation still remains a hot topic here, still high inflation. Tell us about how that's factored into underwriting decisions.
Well, inflation impacts casualty to a greater extent than property because of the fact that you've got the latency, and so you are potentially exposed to inflation uncertainty in the future. You may end up paying a lot more than you are anticipating at the time you write the risk or at the time you set the reserves. So on the one hand, you've got the increased inflation. On the other hand, you also have increased interest rates, and higher interest rates make writing casualty better because you can get higher investment returns. So it's more about, is there inflation uncertainty? Has the interest rate increased enough for whatever future inflation you might get? On top of that, of course, you've got the social inflation. This is the way in which there is increased emerging risk. There's the nuclear verdicts, there's the increased frequency of mass torts, and all of this on top of inflation is creating a extra inflationary environment in casualty, and that only accelerates or accentuates the risk that you're having of the bad outcomes in casualty. So we are working with several of our clients around how they can do more exposure-based reserving, for instance. In exposure-based reserving, you're aware where you might be writing some risks that have longer latency, and so you're going to handle them differently because there's more inflation uncertainty around it as well. And those are the sorts of positive developments that you're seeing from the new applications of data and modeling in casualty.
One of the discussions around here in Monte Carlo this year has been about the complexity of risk and the complexity of the risk environment. How well is the reinsurance industry set up to manage that complexity of risk?
Well, I'll speak to casualty. I'd say that what I'm seeing is that it is better set up than it has been in the past. When people talk about the concern about the next asbestos, for instance, I think that asbestos surprised people. They didn't know how the coverage would work. They didn't know that you could have this kind of a major mass litigation. Today, there's much more data, much more use of models. We also have the experience of property catastrophe to be able to be deployed on casualty. And I'd say that in many ways, they are set up or able to be set up to manage these new risks in better ways than they ever have been. That's not to say all of them are, and so I think there could be some bad outcomes for some companies, but I think that the companies that are doing really interesting things are definitely going to be leading in the market.
Bob, thank you very much indeed for joining us.
Sure, thank you.
For AM Best TV, I'm Richard Banks.